Hi, I'm Rainey with Finance Strategists. In this lesson, we're going to cover
Gross annual income is the sum total of all income earned in a given year for an individual or a company. It is different from net income, which refers to the income earned by an individual or a business after various deductions have been applied. Gross annual income for an individual can be calculated by simply adding up all sources of income, whether in the form of salary, income earned, interest, dividends, royalties, etc. Gross annual income for an organization is different than for a company, since gross income subtracts the cost of goods sold, also known as the cost of sales. The formula to calculate gross income for an organization is gross annual income equals revenue minus cost of goods sold, where revenue equals the total gross sales earned by the company over a one-year period, and the cost of goods sold equals the costs incurred by a company in bringing its product to market. For example, if company ABC has a cost of goods sold of $100,000 and revenue of $150,000, then its gross income, also known as gross profit, is equal to $50,000. Gross annual income for individuals is useful in tax calculations. After the gross income is calculated, relevant deductions are applied to compute adjusted gross income, or AGI. Adjusted gross income is the amount individuals pay taxes on and is what determines their tax bracket. Gross income figures in companies are useful to calculate their gross margins, which are a marker of the efficiency of a company's processes. The gross margin number for a company is calculated by dividing gross income by gross revenue. In the earlier example, ABC's gross margin is $50,000 divided by $150,000 equaling 0.33 or 33%. Gross income can be a useful metric to evaluate an organization. The higher the gross income, the more efficient a company's processes, and the better its chance of beating competition with its products. The final figure for gross income depends on several factors, from the company's industry to government regulations. For example, gross margin figures for the construction industry average between 1.5% to 2%, while those for the tech industry are as high as 40%. Even within an industry, gross income can differ based on corporate strategy. For example, a company may choose to target a specific customer segment by charging premium prices, while another may focus on volume with lower margins. Let's hear from you. In your opinion, why does Apple have a higher gross income than Samsung? Leave your answer in the comments below.
For more information, visit www.financestrategists.com. Finance Strategists, strategies for your future.